What is angel investment? Angel investment is not a random person from the sky coming to actually save you with some wings on the back. No, it's not got nothing to do with that. Angel investment is for a normal person who actually has capital that wants to invest their money into a company or an individual to gain a potential profit. I say potential profit because there's a lot of angel investors who normally invest in startup companies with no assets behind them, and they just invest based on an idea. This is great when everything goes right, but really, would you actually invest in nothing backed in your investments? Comment below. I'd be quite interested to find out. If it is the company that goes wrong and there's no assets backed for it, you can't actually use the properties to sell the asset to actually get that money back. Yes, 100% you can actually have this working for you in using properties to actually get that backed asset investment. Angel investors can get paid up to 12% and sometimes starting as low as 6%. This really depends on a number of factors. The first is how much capital do you have to actually invest? How long do you want that capital in for? And also how much protection that you want to have to ensure on your security. This depends on your actual individual status and how you like levels of risk. So how do you use angel investment in your property business? Let's say I have a house that I've found to actually invest in my personal company. I then borrow the funds from an angel investor, say at 10% per year, for a length of time of 12 months. I can use this money to actually buy the house and refurb it. I can either look at selling it or I can rent it, refinance, and pay the funds back. Once I've finished the actual transaction, I pay the money back to the investor and their interest, and then make sure their capital is paid back. So let's look at this as an actual example. I have a property to buy at £65,000. The refurbishment is £10,000. And let's say the buying fees to get into the deal is £1,500. That's a total cost of £76,500. Now you plan on actually selling this property as a flip. And the open market, you can get, say, £100,000 sale price. You now lend this £76,500 for 12 months at a 10% rate to the investor. The cost of the money to you is £7,650. Once you sell the property for £100,000, you pay the angel investor the capital back, which is £76,500, and then you pay their interest back of £7,650 for the 12 months. You have estate agent fees of, say, £1,500 to actually sell the property. Then you have solicitor fees of, say, £1,000 to actually sell the property as well, which means that you left at the end of it £13,350 profit. Your angel investor actually made £7,650 profit. They're very, very happy, and you made £13,350 profit, and you've used none of your own personal cash. It creates a win-win situation. You're helping somebody else to be able to get a better return on their capital, and also just make sure that you protect this and you get contracts written up so you protect the angel investor and yourself, and everything is in black and white. You want to make sure that you actually protect yourself and your parties involved. They've worked hard for their money, and so have you, so you want to make sure that everyone is safe and is done prepared. If you actually want to learn a little bit more about angel investment and other strategies, hit that subscribe button, and I'll see you in the next video.